Rudy Philippet Van Dyke from FN Arena, and now Markus Helsing, who joins us of Alpha Broking. He's in our Melbourne studio and joins us live. Markus, good afternoon to you. Gold has been a very interesting trade this week, and we'll get to the soft commodities a little later, but I want to kick it off with gold because it is all Fed related, obviously. So no doubt over the next week, it's still going to continue to be an interesting trade, a volatile trade.
Well, I think yes. I mean, obviously the US Federal Reserve stepping back from even an interest rate rise is the way it looks, and as a matter of fact, there's not really any rise built in until later this year. That changed the whole ball game in a big way as far as the US dollar is concerned, and that, of course, is an underlying support for any commodities. So you have all broad commodities having finished a 4-year to 3-year bear market, from oil, from your metals, precious metals, from your soft commodities. So when it comes to gold now, I reckon we are, as you know, I'm very excited about gold, but I think this is now becoming a rather seriously exciting period. Technically, it looks very bullish. If you look at platinum above $1,000 again, gold currently. Look, I'm really looking for levels like $1,300 to be breached on a monthly close in gold, $18 in silver, and $1,100 in platinum. And I think we've got ourselves here a major bull market at our hands.
But you don't see long-term gains in gold, or do you?
Well, that's really what we're all about. We actually are long-term, since quite seriously bullish. That's why we recommend everyone to have 10% of their holdings of any portfolio in physical gold and silver under their control and the related stocks. We really do believe there is potentially at some point the currency crisis at our hand, and that could give you some sort of a lack of trust in certain traditional asset classes that might bolster the likes of gold and silver even more. So we're not trying to be doom and gloom type investors. We just want to make sure that investors batten down the hatches and look to make sure they diversify and have enough gold and silver there to make sure they can cushion any blow in other traditional investments if they do occur.
Markus, it's Rudy Philippet Van Dyke, FN Arena. I know you're bullish on gold. I know you're bearish on the US dollar. On my observation, gold has still gone sideways over the past 2 months or so. But that wouldn't. I mean, I agree with you. If all hell breaks loose and if the US dollar continues declining, then you may want to own some gold. But I have a different type of question. I mean, apart from the commodities you just mentioned, and then you can discuss whether gold is part of commodity space. But most of the base metals are actually substantially below where they were in April, the levels, with the exception of zinc. And there's a very particular reason for that. Are you, in your universe, are you thinking that if oil and gold and silver and platinum will continue their uptrend, that they will drag along the base metal space and the likes of iron ore as well?
Well, the short answer is probably no. When you look at some more specific metals like copper, I think yes, there's definitely a pulling power with the weaker dollar and generally the precious metals dragging it back up to some level. But as we all know, I mean, the China factor has a certain unpredictable factor, but also a very predictable factor. We do now know that the iron ore market and the steel market is flooded globally, and that obviously puts a cap on any major price rise. I just looked at the iron ore forward pricing, and it's still about $10 at a backwardation 1 year out. So really, no, I can't see that race away. But short term, absolutely. I think everything, as we all say, a high tide tends to lift all boats. So to some degree, it will support even commodities such as iron ore or some base metals that might, in their own right, not have much justification of a rise. So I think you might see that anyhow. I think the US dollar is just at an absolute critical level, and after the bounce we had over the last 4 weeks, we believe this thing is going to be breaking to the downside, and they'll give exactly the sort of lift that we're talking about.
Markus, Scott Phillips here from the Motley Fool. A rising tide might lift all boats, but the thing about a rising tide is it goes out eventually. How long until the end of this trade comes around? Is it? You know, we talk about short term, but what are you thinking, or what are you looking for in terms of the end of this particular trade you're suggesting?
Well, in the moment, I think the weaker US dollar also has another effect. Other than commodities, it tends to obviously reprice any other asset out there. So with all these fundamentals out there, from Federal Reserve rate hikes being pushed out, the Brexit vote and all that, but we wouldn't be surprised to see generally some sort of a blow-off in asset prices over the next few months, including stock prices, share market indices. So, I mean, it's generally really, it's a major short-term lift with the weaker US dollar, but also generally, I think when you look at the technicals, the market's been treading water now for a long time. Our domestic index just struggles to go through 5,400. Just imagine it goes through it on a 54.50 break on a monthly close. It could go very quickly a lot higher. Look, we just think the gold market as such, gold, silver and platinum market, I just had meetings with physical bullion traders yesterday evening, and they just see a dramatic increase in high net worth buyers of bullion. Now that does tell you that there is something going on, so they actually does start hedging a lot more. So I think there will be at some point an absolute unlock where you might see precious metals keep on going, where other asset prices, traditional ones, might go the other way. We're very bullish on gold and silver, as you know.
I want to talk some of the softs as well. We don't often talk about them here on the program. Coffee in particular, because this is something I certainly love to drink. Where are you seeing coffee head and some of these softs?
Well, coffee, like any other soft commodity, has been a major bear market for 3 or 4 years. It just broke key levels. As you know, there's a market that we look at. I look at it for 35 years. It's relatively considered a manipulated market to some degree, because you have your big crafts and Nestle dominating on the demand side, and of course supply is a lot more fractured. But that now seems to have really now gone the other way. The technical break, now we're at 139 cents a pound, New York coffee. Look, we really believe there's a very good chance for soft commodities to follow sugar and basically go into some sort of a new bull market that could lead us to levels we have not seen for a long time.
Markus,
we're very bullish. I mean, this is just... Sorry.
No, go for it, mate. Well, good. Look, when you said coffee, my ears pricked up. I'm not big on commodities, but coffee, you have my attention. I'm curious as to, you're about a 4-year bear market for coffee. And for most of our viewers, and certainly for me personally, I don't follow this particularly closely at all. What drives a 4-year bear market in coffee, and why does it turn around? Is this environmental? Is this straight supply and demand? Is simply more coffee beans or more coffee plants being planted? What drives a 4-year bear market? And then what drives the turnaround to a bull market?
Well, there has been a real major shift in, for example, Vietnam was a zero-sum, no producer of coffee 30 years ago, and now it's one of the major coffee producers. So there has been a shift in many nations. No, it's not just really Western Africa and Southern America, but the planting of coffee has really increased significantly over the last 10 to 15 years, and the result of that resulted in a certain oversupply. But look, it's a soft commodity. Fundamentals can change sometimes overnight. The big picture is supply is coming on an ongoing basis. It is a natural commodity, so that hence if there is some weather-related issues, things can change very quickly. So we believe it's just an adjustment, also aided by a weaker US dollar, and that combined with a bit of a healthier demand-supply side scenario will most likely lead to higher prices.
I think I speak for everyone watching you when I say I hope there's no boom in coffee prices, because we can't afford our coffee.
It's pretty expensive enough.
$3.50, $4 a cup. That's enough for me.
Okay,
surely.
I think I pay $4.95 for a large somewhere as well. It's pretty expensive already.
I hope you're wrong, Markus.
Yeah, we hope you're wrong. But Markus,
well, have a sword for the poor farmers in Central America. they get a fraction of that.
Yeah, exactly. That's very true. That's something to keep in mind. Grains as well, another soft. Talk us through grains and the dynamics playing out globally for that at the moment.
Well, the 3 key grain markets are soybean, corn and wheat. They have their own fundamentals. I mean, soybeans a major market in the US and Brazil, of course, and the demand out of China. Soybean really has been in the lead in the latest rally, and it's a significant lead, followed strongly by corn, and now with wheat basically getting lifted by the general price action in corn and soybean. We mentioned that a month or 2 ago. One of our head grain traders, he just doesn't stop pointing out that the supply-demand scenario really basically shows that we are flooded literally with wheat. So it tends to probably rally a bit less euphorically than what we've seen in soybean and corn. But again, it's a general trend, and they tend to lift each other. So there could just be this sort of momentum that might just carry it a bit further. I mean, wheat is currently basis spot around 520 cents a bushel. We could see $5.50, $5.80, $6 levels very, very quickly. However, if we do see these sort of rallies, we might probably see the market move back to the actual base fundamentals, and that might most likely cap any such rally at these sort of price levels.
All right, Markus Helsing, we'll leave it there with you, but appreciate your time.
Thanks, Ingrid.
Markus Helsing there. And I want to mention